All right, guys, what's going on? What's going on? Good afternoon. Welcome to the Aftermarket Recap. My name is Carlos Garcia, founder and CEO of G.A.R Capital. Thank you so much for taking the time out of your day to join me. It is 4:58 Eastern Standard Time. We usually do this at 5 p.m. Eastern Standard Time. Just wanted to start a little early this time. Yesterday's video lasted a little longer. You guys had some really good questions. I kind of went a little more on my monologue. My apologies there, but you guys seem to enjoy it, my opinion and stuff like that, reporting the news. So I just want to say I'm very humbled that you guys jump in here every single day to talk to me and ask questions. It really means a lot. It's kind of like I take it very seriously in terms of what I say, what I do with the market, because you guys look up to us as kind of guidance, which really helps out, and I understand that. So, the most important thing is that we give it to you straight. We give you just the facts and what we see, and then you guys decide, right? Kind of sounds like a news organization. I actually was watching this show the other day on HBO called Newsroom. It's an older show. It's actually pretty good. And I was like, wow, it's kind of like that. So pretty cool. Kind of like your news anchor, but I really enjoy it. So again, from the bottom of my heart, thank you so much for joining me, and good afternoon. Let's go ahead and talk about it. Bottom right-hand corner of your screen, white logo. Click that, turn on notifications, subscribe to our channel, like our videos, please. Really do appreciate when you like the videos. It helps the YouTube algorithm. And of course, feel free to comment any of your questions. The live chat is always on when we're on. And of course, comment your questions after hours, here to help. Love you guys. Thanks again. Let's do it. Dow Jones closed down 170 points. NASDAQ down 0.13%. We'll go over the charts here in a second. S&P flat-ish, down 0.10%. Tomorrow being the big day. Tomorrow's non-farm payroll report. We're going to talk about that too. The VIX. So yesterday, this is important. Yesterday on Instagram and Twitter, I wrote down 3 scenarios for the NASDAQ. I don't know if you guys saw that overnight. I did that at midnight. I couldn't sleep. I was thinking about the market, and I wanted to send that to you guys. So again, the main thing here, I'm going to go ahead and send out the 3 scenarios. It is here on Twitter. So it says possible triple bottom here on the NASDAQ futures on the daily. You guys can see it here. This was last night, 12:22 Eastern Standard Time, midnight. Scenario A, we flush through this level, 15,200 to 15,000. Or we flush even worse than A and revisit the October lows, 14,400. We break through that level here. Or this support holds for a convenient short squeeze non-farm payroll on Friday with a strong jobs report. That could possibly be a scenario. So just keep that in mind. We're going to talk about that. What are some of the things that we were looking at? Well, here it is. Let me give you guys here the breakdown. I posted this on Instagram. It says here 3 things we're going to keep an eye on. The VIX if it stays below 20, 10-year yields if it stays below 1.9, and if the dollar can hold below 52-week highs of 96.93. Now we know what we're looking at. What is the VIX today? 1961. Check mark. Number 2, 10-year yields. Where are we at? 1.733. Up today, but not wildly up. Check mark. How about the dollar? Dixie up 0.08%, 96.24. We're looking like we may be getting a short squeeze tomorrow. Kind of hard to predict. Obviously, I don't have the jobs number ahead of time. I don't have it like that. But again, we're starting to see the 3 macro indicators coming through what we want to see. So don't be surprised tomorrow if the NASDAQ does go up to around 16,000 tomorrow. Don't be surprised if it does. If it doesn't, and we break through the blue line, which is the 50-day moving average, the 100-day moving average here on NASDAQ futures, then it gets interesting. Then we have to short down to 14,000 or 15,000, which is a pretty good short if we can get there. Right here to short, the risk reward is not there yet ahead of NFP. If anything, you probably want to be long here to play this pivot bounce. I got into QQ calls today for that reason. So just a heads up, we broke that down. Take a look at IWM. IWM small caps did well today, up 0.57%. The dollar index was up 0.08% at 96.24. 10-year yields 1.733. Take a look at gold on the future side. Gold fell today 1.87%, 17.90 an ounce, again below that 1800 level. Silver 22.20, down 4% today an ounce. Crude oil is now near $80 a barrel, 79.65, 2.31%. I've been saying crude oil, waiting for that $100 barrel, and I'm taking out energy from my portfolio. I have XOP, that's the Petroleum Refiners and Explorers ETF. Excuse me. And then we're going to take a look at some credit markets here. High yield credit up 0.01%, 86.09. I talked about that on Twitter as well. Think of Twitter as a live blog of the stock market. I live blog as I go. Whatever I see, I post. That's important to you guys. LQD, which is investment grade bonds, they fell slightly today, 0.13%, 130.28 this afternoon or this session. Taking a look at crypto futures, Ethereum futures down 4.39% at 34.22. Bitcoin futures 43,185 down 1.47%. I still haven't sold any crypto. Instead of I just kept buying. I actually bought some more stocks today. I bought some SPY-G. I buy every week. So again, that's every Thursday. So I call it SPY-G Thursdays with Investment Club. And gasoline futures up 0.66% at $2.30 a gallon. I also posted something interesting, a little bit of a perspective shift when it comes to investing. I posted that on Investment Club. I also posted that on Instagram. I hope you guys take a look. Again, what I wanted to do was really kind of continue on what I was talking about yesterday with investing, but yet this is going to be kind of a change of perspective that we don't allow stock prices today or tomorrow to define a company. Invest in companies, not stocks. Let's kind of rewire that perspective. So again, it won't give you as much stress when it comes to the companies that you own, and you won't be beholden to sudden stock moves up or down. If a stock jumps 2% in a day, it does not make it better than it was just yesterday. It just went up in price. If a stock goes down 2% today, like let's say Apple 1.67% today, does it make it a bad stock? No, it just means the price changed. That's all it is. The saying goes, today's price is not yesterday's price. I've always seen that online. I thought that was funny. Very humorous. Anyways, so that's where we are today. Let's take a look at the groups today and what worked, what didn't. I did expect kind of a flat-ish day today because of non-farm payroll report tomorrow. That's at 8:30 tomorrow. Keep in mind, that is the report for last month's job adding to the economy. Again, that is reported by the U.S. Commerce Department. One-day relative performance, energy up nearly 2%, financials up 1.41%, communication services were green, industrials, consumer cyclicals, real estate round out the green today, utilities, healthcare, basic materials all down today, but utilities being down 1%. Interesting. We know utilities are kind of a safe haven play. You know that healthcare is kind of a safe haven play, right? We know that when stocks go down, utilities tend to go up. They're kind of a bond proxy, we call it, kind of like moves like bonds, pays a dividend. So, what is the market telling us today? Maybe we're a little bit oversold. Maybe we're looking at those moving averages. Moving averages are key. So let's talk about so far year to date, what has worked. Now, granted, it's only been the 6th day of January, so let's see it. Remember, we started the market on Monday. Energy is the big winner so far year to date, up 6.73%. Financials up 3.23%. And I've said it before, in a rising rate environment, energy, financials, industrials are your friend. They're the ones that are going to outperform. Those are the ones. So again, right now we are pricing rate hikes. Fed Governor Buller was saying that March would be a rate hike more than likely. He's a voter. So again, you can see what's down today, down 1 year. So far year to date, technology, healthcare, communication services, real estate, utilities. So again, what you're seeing is more of the interest rate sensitive, the ones that do very well in high interest rate environment or higher interest rate environment. Energy, financials, industrials, they're doing well year to date so far. And then the ones that are more rate sensitive, cyclicals, technology, you can see they're taking a little bit of a hit. Real estate as well. Real estate does better when rates are lower because it's cheaper to borrow money to buy a house, obviously. Let's take a look at the heat map today, and we can see Tesla down 2.15%, Amazon down 0.67%, Facebook had a day up 2.56%, Nvidia up 2% today. Banks, Berkshire Hathaway, PayPal was up today, so banks did well. You see energy here, XOM did well, CVX did well. Defensives kind of mixed, Target did well, Dollar General, Costco was flat, Walmart down 0.28%. The names that did well yesterday, AT&T and Verizon, took a little bit of a step back. Netflix was down 2.51%. The software companies bounced back slightly, CRM did. Adobe's continuing to slide slightly. You can see also Accenture was down 4.83%, and of course we talked about Apple. And this one I haven't seen in a while. UNH, one of my favorite little babies. UNH down 4% today. Again, I said anything below 400 is a gift, and that's where we are. All right. So non-farm payroll report, what to expect? Again, right now we're looking at technicals that link up with the macro environment. So we're looking at it here on NASDAQ futures. Let me go ahead and expand it for you to make life easier. And you can see that we're still holding on to that 100-day moving average. Now, have we broken the 100-day moving average before? Absolutely, in 3 separate times. We had it in October, we had it in May, and we had it in March. And what happened after that? We continued to grind higher. That's what I expect. Again, it's not going to be one green shoot to the moon. It doesn't work that way. But again, you're going to get volatility. But can you see from left to right how bullish the NASDAQ has become? From 12,500 to around 16,767. So again, I'm still bullish in the market. Nothing has changed my perspective. Again, the only wild cards here are really the COVID and COVID variants and possible lockdowns. That's really the only thing that kind of, in a sense, you keep in your back of your head that things could change, obviously. But we know when we had lockdowns in 2020 and COVID started hitting, it was basically a fire sale. And if you picked up stocks, you did very well now. Another stock that's rising today is GME. GameStop says the retailer is launching a division dedicated to new technologies amid a push to turn a profit, mainly NFTs. That's from the Wall Street Journal. I went ahead and retweeted that info. You can take a look here on tradethenews.com. Reportedly to launch a division focused on NFTs and crypto. Plans to partner with 2 crypto companies. That's GameStop. So let's watch that. Another big winner today was DWAC, which is a SPAC company that is developing an app with former President Donald Trump. Truth social app to launch on February 21st, according to App Store listing. DWAC, which is Digital World Acquisition Corp. They were up today nearly 19.65%. And you can see it's pretty much flat pre-market, aftermarket right now. Let's go to the questions and answer. GME, not again, please, right? Don't worry about that. I'm not going to chase that thing either. Good afternoon. And what do you expect from CPI next week? That is really the big one. So we have 2 big reports coming in the next 4 days. We have CPI coming in next Tuesday. That's the Consumer Price Index. We just saw Germany's inflation report and it was not good. I would assume it's the same. So it really is the number, but the reaction. So again, maybe non-farm payroll pushes it up, gets us to where we want to go in terms of the NASDAQ. Maybe we'll tap the 50-day moving average the next couple of days. Could be, or kind of do that. And then you have the inflation report get us right back down to the 100. Right now, in the brand new year 2022, it's really become literally a scalper's market in a sense. Kind of swinging with so many external factors is a little difficult. I don't know exactly what to expect with CPI. I expect it to be high, but does it be higher than expected? That's a tough one. Halo 3 theme, Carlos' favorite music to trade to? Yes, that's my favorite song to listen to. That and Biggie. Biggie's my favorite too. Vask Tech. I don't know what Vask Tech is. If you can go ahead and just let me know the ticker. Appreciate the scenario insight, much more mental guidance. Yeah, no problem. Again, the idea is, listen, man, I know I could probably go out there with some really cool graphics and say the world's ending, and that'll get us clicks and likes and all that stuff. We're not a tabloid. Hell, we're not even a news service. We're just here, just breaking it down, keeping it real, and that's the deal. I like that. Keeping it real, and that's the deal. So, with that being said, again, I'm looking at the same information as you. I disseminate it. And again, we could have differences of opinion. I actually am open to that. I think debate and differences of opinion is a good thing. Obviously, if you think the market is going to continue to go down, that's fine. I'm okay with you saying that. And again, we could always chop it up and talk about it. And again, I would like to hear your reasonings behind it and so on and so forth. Again, this is what makes a market, guys. You have people that are bullish and people that are bearish. And yes, I am still a bull. What can I say? Let's see. Hi, CEO G.A.R. Do you plan on signaling puts of NQ break support? Absolutely. Absolutely. I'm not against puts. I'm not against shorting. Absolutely. So again, yes, that's what I'm looking for. Target 4. Favorite longs to load up on this sale? Football. I bought football yesterday. So I do have some football. And I also bought some more Palantir yesterday. Thoughts on psychology dealing with right ranges and chop? Really the main thing. If you're an investor, look at what I posted in terms of how you're investing in companies, not stocks. That'll make things a little different. For example, like I explained it, do you think a stock price today defines a company? Would you say so? I don't think so. Again, because prices are fluid. Does your FICO score, your credit score, define you as a person? If you had a 550, 650, 750, does that define you as a person? No, it just means your credit worthiness. That's all. It doesn't mean you're a better person or a worse person. I'm pretty sure there are assholes out there with an 800 credit score, and there's some really great people with a 550 credit score. We don't know their situation. They got a divorce, they went bankrupt, they lost their company, they got laid off. We don't know. It's just a score. It's just a number. So you're literally just a number. How would you feel if you walked in to apply for a job and they asked you, they ran your credit and they said, you are a 600 FICO score, we can't hire you. But yet your resume is perfect. Your resume has the experience that they're asking for, the flexibility, you're ready to work. But they said no because you obviously don't have the right FICO score for them. So is Apple at 172 today, right? What has changed in Apple today the past week? Really nothing. But the problem is that we've commoditized all these stocks into the S&P futures. So when the S&P futures gets a little weak or the NASDAQ futures get weak, the major big companies that are weighed in the stock market are the ones to get hit. Look at the equal weight ETF of the stock market today, RSP. What was that today? It was green today, up 0.22%. So again, keep the perspective. I always say when in doubt, zoom out. So let's zoom out some Apple today. Oh yeah, definitely. What a shitty company, man, right? Again, if we're defining by price, what a crappy company. Oh man, you know how crappy Apple is? Look at this. Look how horrible they are. And if you got worried about every little dip, every single time, you'd be chasing it every time. Again, good companies with great balance sheets, great management, a great sector, a growing sector, they're going to be fine regardless of intraday moves. Again, not every stock moves based on reasoning. A lot of it is algorithms. A lot of it is different things. So again, don't be beholden just to the stock price. A good company is still a good company, whether it's $60 or $59. Again, that's where it takes you to take a look at the research. This is why I do the research when it comes to the top 10 stocks, and we're going to talk about that on Saturday's video. Thanks for this. You're welcome. For those investing in index funds, people still invest in QQQ, for example, switch to dividend-heavy funds for interest rates. Okay, so again, let's take a look at the largest companies of the QQQ. Let's do that together. Let's see here, largest holdings of QQQ. Let's go and bring that up here. Okay, here's the largest holdings of QQQ. We're going to go to Investopedia. And what are the big ones? Apple, 11%, Microsoft, Amazon, Tesla, Google, Facebook, Nvidia, PayPal, and Adobe. We know that. Those are the biggest holdings of those. So let's just say, if we add all this up, right off the rip, 21% is Apple and Microsoft. 21%. Then you have Amazon. That puts us up at 29%. We add Tesla. That gives us a 34%. We add Alphabet, which is Google. So that's about, let's say, 8%. We'll add it to 32. Let's say 40%. We add Meta, which is another 44%. Now we're at 44. Add another 4% for Nvidia. That's 48. And then we add PayPal, which would be at 50, and then 52% for Adobe. So 52% of holdings of the QQQ is right there in front of you. I just highlighted. Do you think any of those companies will go bankrupt in the next 5 years? Anybody? Nobody. Probably not, right? If Apple did go bankrupt, we'd have a bigger problem than your portfolio, in my opinion, or Microsoft, or Amazon. These companies are tried and true. Hell, even Tesla makes good profit now and are growing. They're doing great. These companies, in a sense, keep things even in a sense. So again, I like QQQ long, even if you think interest rates are rising. Again, how are you looking at this prism? Are you looking for short-term gains? If a stock you love today gained 100% in a day, would you sell? Probably not. So why would you sell if the stock fell 10% in a day? If you liked Pinterest, for example, a year ago, right, and it's down to 60% drawdown, what has really changed? Has the fundamental of the company changed? Maybe let's say the earnings being equal. What has fundamentally changed in the company? Do you still use Pinterest? Do you still like Pinterest? Do they have good management? Do they have a good balance sheet? Do they make good earnings? Well, yeah, check, 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 check. All of those, right? As an example. As an example, I don't own Pinterest, but yet the price went down. So just because the price of someone else is willing to pay went down, that means it's not longer a good company. So if you live in a nice house and your neighbor's house is a pigsty and he makes that house go to crap and he short sells it or forecloses on it, should that affect your home? Should your home be worth $100,000 less because your neighbor doesn't handle his business? It's the same exact thing. It really is the same thing. So again, these companies are tried and true in the QQQ. I like QQQ long. I like SPY-G as well. So again, as an example, it has a lot of growth companies. Again, what you're looking at, the blue screen, the blue lines here, that's 52% of QQQ. 52% of the companies or the holding is right there. Do you think any of these companies are going to go bankrupt? No, I don't think so. I think they're all great. PayPal went down, sure. Don't get me wrong. PayPal went down, but do they make money? Yes. Do they have strong management? Yes. Do they have good balance sheet? Yes. So really what's changed is just the price. What's changed is the perception of value, not the inherent value itself. For example, gold. Sure, gold went down today, but gold is still valuable in a sense, right? Well, gold is still fine. You'll always find a buyer for it, but it may not be the price you want, sure. But again, we know the underlying value. I talked about that yesterday. If Ferrari had a sale, the dealership from Ferrari called you today and said, we have 20% off on the new 450 whatever car, and it's a beautiful car and you love it. Would you go run and buy it if it was 20% off? Probably. Maybe that's your thing. If you're a big car guy, yeah. Why wouldn't you, right? Because you understand the value of the car. You understand that just because today's price is this, it's not tomorrow's price. You don't know, that changes. It's dynamic. So let's change the thinking from buying stocks, just looking at numbers, to seeing the tickers in the company itself. That's for investing. When it comes to trading, a whole different ballgame. That's a whole different dance. We're just talking about investing today. Should we be bearish on QQQ with so much being debt under balance sheets and interest rates rising? Who has a lot of debt in terms of QQQ? Apple has the most cash. Microsoft has tons of cash. Amazon has tons of cash. Google has tons of cash. Facebook has zero debt. Nvidia has tons of cash. PayPal, okay, maybe they have some debt. Adobe, tons of cash. Tesla has cash on the balance sheet. Sure, they have some debt, sure, but again, 80% of those companies have tons of cash on hand. So I'm not really worried about those names. Those names. Again, that's 52% of the index of that QQQ ETF are those names. Those 10 names or 11 names, I'm not sure. What do you expect we can see a reversal upwards in tech? That depends on tomorrow. Again, we need to see if this holds that 100-day moving average, that blue line right here, which is right around 15,681. So let's go ahead and place an alert right at the bottom, 15,556. Because I don't want it to just be at the 100 day the whole time. I want an alert to actually mean something. Let's see if this triple bottom holds. If it does, then we're going to swing back up to 16,152. And then we're going to stay in range. And then what you should do is if we get to 16.5, you pull the ripcord and you short again. And then you get back down to 16,152. And you're basically back in range from November 5th to January 5th. November, December, January. 3 months of just range. That's all you've been doing. Really, that's it. High growth stocks. When it comes to high growth stocks, high beta names, yes, interest rates will hurt them short term. But keep in mind as well, I don't believe you can keep good companies down. I know a lot of people are getting burned with DraftKings. I love DraftKings. DraftKings is one of my favorite companies to own because I use them. If you are not sure on a company and you're worried about it, sell immediately. It's not worth your stress. It just really isn't at the end of the day. But keep in mind that if you believe in the growth of the sector, believe in the growth of the company long term, then you should hold it. So again, DraftKings to me, being up 4.67%, New York finally approved sports gambling. Hooray, New York. I think once it gets federally legalized, like cannabis, you will be happy that you own them. That's just me. But again, I'm a big sports guy. I am the 2-time fantasy football champ in DraftKings. By the way, no need to applause. That's what I think. Do you think about EV charging stocks? Can they go lower? They can, but again, EV, do you think that's a growing sector in the economy? I believe so. So again, don't we need more chargers? How many gas stations are in the United States? Have we even scratched the surface of charging vehicles like we do with gas stations? Not even close. So again, we're talking about price today. Does that really define the company's growth in the future? Not to me, it doesn't. How do you feel about JPM for 2022? I love JPM, one of my 2 favorite financial companies. I own JPM, but I like Goldman Sachs just a smidge more, and that's it. All right, guys, we're going to leave it there. I know it was a lot of talking. My apologies again, but I really wanted to give some context. If you want to read the post, take a look on Instagram. I posted that. It was a conversation between me and Investment Club. All you're going to see is the picture of me speaking. I'm not going to give out everyone's name, obviously, but take a look at it. Hopefully that changes and rewires your mind to look at stocks a little differently as an investor. We'll leave it there, guys. I will catch you tomorrow for the morning note, 9 a.m. Eastern Standard Time. We'll dissect the move from non-farm payroll report, which is at 8:30, and we'll go from there. And have a great Thursday evening. I will catch you guys tomorrow for the morning note. Appreciate you as always. Have a great rest of your Thursday.